So we need to talk about the giants in the room. Fannie Mae and Freddie Mac are up to something interesting.
Oh, are they finally making noise? Usually they're pretty quiet.
That's exactly it. They've been very quietly stockpiling mortgages. We're talking billions of dollars added to their portfolios recently.
Stockpiling? That sounds intense. What's the play here?
It is intense. Since May, they've added about $55 billion in mortgage-backed securities and loans to their books. That is a 31% jump in their retained portfolio in just a few months.
Whoa, 31%? That is not a rounding error. That is a strategy.
Exactly. And Bloomberg's Scott Carpenter pointed out that while they're tight-lipped about it, the numbers speak for themselves.
Okay, so why the sudden shopping spree? Are they just bored?
Hardly. The theory is that they are dressing up the bride for a wedding, or in finance terms, preparing for a public offering.
Ah, the IPO rumors. So if they buy more loans, they earn more interest, boost their profitability.
Bingo. And then investors like what they see when the government sells a slice of its stake.
But there's a side effect to all this buying, right? It's not just about profit.
Right. Basic supply and demand. When Fannie and Freddie buy up mortgage bonds, it creates demand.
Which drives prices up and yields, aka mortgage rates, down.
Precisely. So it's a win-win. They look more profitable for an IPO, and homeowners potentially get lower rates.
Now, you mentioned the government selling a stake. Is the Trump administration actually going to privatize them completely?
Not exactly. FHFA Director Bill Pulte and Treasury Secretary Scott Bessent are looking at selling a slice of the government's 80% stake.
So it's more about monetizing the asset than setting them totally free into the wild.
That's the vibe. Keep control, but caution a bit.
That makes me nervous, though. If they go public, what happens if things go south, like in 2008?
Well, Trump has promised an implicit guarantee. Basically, the government still has their back if disaster strikes.
Okay, so a safety net. That keeps rates low because investors know Uncle Sam is still in the room.
Exactly. It exposes taxpayers to some risk, but it keeps the housing market stable.
Think of this buying spree as quantitative easing light. Remember when the Fed was buying $40 billion a month during the pandemic? Hard to forget. Rates hit rock bottom.
Well, Fannie and Freddie are currently buying about $13 billion a month. It's not Fed level, but it's significant.
And Citigroup thinks they might add up to $100 billion total? That is some serious purchasing power.
I keep hearing about this spread, the 30-10 spread. How does this factor in?
So that's the gap between the 30-year mortgage rate and the 10-year Treasury yield. Usually it's under 2 percentage points.
But lately it's been wider, right? Making mortgages more expensive than they should be?
It was, but it's narrowing. It's around 2.05% now. This buying activity helps crush that spread, which directly lowers rates for buyers.
I assume lenders are loving this.
Oh, absolutely. Groups like the Community Home Lenders of America are practically cheering them on.
They want Fannie and Freddie to have even more leeway to buy, right?
Yep. They argue that as long as that spread is high, let the giants eat. It stabilizes the market and helps independent banks.
So, to wrap it up, Fannie and Freddie are getting buff for a potential IPO. And as a bonus, mortgage rates might chill out.
That's the story. It's a quiet strategy, but the billions of dollars involved are screaming loud and clear.
We'll definitely keep an eye on that IPO news. Thanks for listening, everyone.
Catch you next time.